Okay, wait, sorry. One last point. Just Jeff, in terms of flow, we'll go. We'll there will be a countdown.
We are already counting. We are already counting down.
All right. Good evening, everyone. Slightly late today, but I'm Anthony. Hey, Reggie, come on,
here,
man.
yes. Yeah, we are slightly
Yeah.
late, okay? For once, we start at 10 p.m., but we got interesting stuff for you, right? So, yes.
Yep. Cool. And we have a new guy with us today, Jefferson. Hi, Jefferson.
Hey, yeah. So nice to be here on the show. I think you guys oversold me as the macro guy from the last season. That's really ready. Yeah, I'm just a learner of the markets as well, just like everyone else. Yeah, but be very happy to be on the show for sure. Yeah.
No worries.
That's what all the
taken a while,
senpai
but we are
says.
glad for you to be on.
Yeah, that's what all the senpai say. Oh, we are learners of the market. You know, we will learn more as we go along. So yes, but Jeff will be joining us.
Comes and teaches us.
Yeah, definitely. Jeff will be
guys.
joining on the show as the macro guy, right? So he's going to be sharing with us a lot of these kind of thoughts. Yeah. So take it away, Anthony.
All right. So today, let's just talk about macro for now. It's a special episode. That's why we are late. We are going to talk really in depth into macro and what's been going on and how it's affecting the markets. And then we'll go back to our usual programming with the different companies and then our thoughts on them. So yeah, macro. Jeff, why don't you start us off? What's been going on, right? I know there's interest rate hikes, there's tapering, there's no quantitative easing. My portfolio is dead, but what really is going on?
You still wait from last week. Yeah. Yeah, but there's quite a bit of things that have been going on last week, right? So we had the FOMC that happened on last Wednesday, and in less than 24 hours on last Wednesday night, the Fed basically doubled the pace of taper and signaled 3 hikes in 2022. And then you also have the Bank of England, which surprise did an unexpected hike of 15 basis points. I mean, everything's going to sound very foreign for sure, but I'm pretty sure Anthony and Reggie will be asking questions later on, the hard questions to clarify things along the way as well. And the largest bank hike and the ECB announced the end of pandemic emergency purchase, as well as delivering a smaller than expected app envelope for 2022. So essentially, you have a few months ago, then you think back, it was really hard to imagine for a hawkish pivot from the global central banks. Moreover, then this basically come in the time where the press is at peak pessimism around the whole COVID situation, right? That's pretty much where all the easy money comes in, and happy days for all the retail investors and myself as well. Yeah, but not so much when you start seeing inflation going a lot higher, and now with the whole fact that the Fed is trying to deliver on multiple fronts as well, not just having to double the pace of tapering, which basically is going to bring the bond purchases to zero by March, allowing them to hike at the March meeting itself, but also signaling 3 hikes in 2022 and 3 in 2023. So this definitely suggests some form of material change of directions. Yeah.
Okay, wait. I know you're speaking English, right? Let me digest it a bit. This is very convincing. So some context,
That's
right?
so convincing. That's so convincing.
Come on.
It's just like, I'm lost, but I know you're speaking English anyway. Yes, continue.
I had a friend teach me about quantum computing. That was quick. But yes. So take a step back. This was all from the pandemic, is that right? From the start of the pandemic, central banks trying to boost economic activity and all of that. Is that the gist of where it all started from?
Yeah, for sure. So back when you had the COVID situation that happened, the Fed
Mm-hmm.
basically have to do an emergency cut. Uh, Basically they did it on a Monday or rather Sunday night that time, the US
Mm-hmm.
time itself, and essentially that signal to the market that easy money is basically coming because liquidity was an issue to the whole market at that point in time. And the last thing that the
Okay.
Fed wants is a global financial crisis, the scale of 2017 to 2018 as well. Sorry, 2007 to 2008.
Oh, okay.
Yeah,
I was wondering if I missed out a financial crisis
yeah,
somewhere
yeah,
at work. Okay, no problem. So they put a lot of money in. I guess that's the quantitative easing part.
yeah.
They lowered interest rates. You mentioned something about bond buying. What's the mechanics of that? How does that really work?
Yeah, so essentially, if you want to think about it, right, the whole idea of which they have been buying bonds in as part of their quantitative easing policies
Mm-hmm.
itself, and then now having to do the tapering is theoretically is just the reverse of every of the policies that they have put in place for this whole COVID situation, and it was all intended in the name of having to stimulate economic growth, right? So
Yep.
tapering in this case is just having to essentially um, reduce the purchase and accumulation of the central bank assets. That's what you can think of. They want to reduce the dependence on sustained monetary stimulus under the QE, so that essentially you have more sustainable economic growth in the long run. That's the general aim of tapering. Yeah.
Okay, give me a little bit of color here, right? I wanna expand a little bit on the bond buying activity. So how does bond buying then lead to an increase in liquidity in the market? Because that's the goal, right? During the pandemic times. Yeah.
Yeah. So, interestingly, as a rule of thumb, right, you can think of it when the Federal Reserve cuts interest rate, it essentially causes the stock market to go up, and when the Federal Reserve raises interest rates, it causes the stock market to go down. But one of the things to think about is that why is that so? It's really because if you just think of the risk asset cycle itself, and if you look at it from a point of view where um, liquidity is a concern. So if for example, if the Fed is signaling to raise interest rate, then the whole idea is that in the long run, your risky assets like equities, crypto, and maybe even commodities will be more of a concern in the long run. So whereas for bonds itself, then essentially why do you want to buy bonds right now, right? So because in that sense, if in the long run you expect the Fed to raise interest rates, and given the fact that price and interest rate is inverse of each other, then you would rather wait a little bit later to buy a bond, so then your bond prices will drop as well. So that's the whole dynamics behind it. Yeah. And of
Okay,
course,
and I
if you want to
guess
think
the
about it,
idea is sooner or later this all flows back into a real economy and there's real economic
yes,
activity,
of
right?
course.
Because money supply and all that kind of thing.
Hey,
Yeah.
Sorry,
oh
this is
guys,
this is
So
this, this is this is my this is my uni macro, right? But
guys,
that's
guys,
okay.
exactly.
these
Enough.
Yeah.
are these are
Yeah.
big causality statements here. Yeah, like we're like so certain. Like, uh,
Yes. There is
yeah.
something somewhere that magically makes things work, right? At least that's how I was taught it in uni. So that's how I'll tell people here.
Yeah, I mean,
But
essentially, the more layman way of thinking about it will definitely be if you have a rate hike, then it's definitely going to affect the availability and cost of overseas finance as well. So the foreign
Mhm.
portfolio flows coming into the country, and both your equity and bond markets will definitely slow down. And with the whole idea of where easy money is no longer a thing, with low interest rate not a thing anymore, there's going to be cost of borrowing will be a lot higher. So businesses will then struggle to pay off their loans as well, having to yeah, I mean, like these days we have so many shell companies out there, so it's going to be an issue at the same time. So the whole idea is really to see how fast the Fed will keep to its words, having to raise the interest rates. If it's treading on a very thin line, right? Very thin ice as well, in the sense where if it raises it too quickly, then it will definitely affect all your risky assets. And with the fact that nowadays your retail guys have so much access to crypto, to equities, and it's not just, it's like crypto itself has recently, in the last month, there was an increase of $1.5 trillion into the crypto market. So that's a huge amount of money that's going to be greatly affected by this whole Fed situation as well. Yeah.
There's this other causality train of thoughts, right, which is the whole idea of risk-free returns, right? When hard currencies push up their interest rates, and people will shift out of risky assets to come into the bond markets of some of these hard currencies, like the dollar, like the pound, like the yen, like the euro. Does that hold, in this discussion? Because I really want to put this out there, that there's many ways to look at this thing. It's not just a one trick pony of like, oh, interest rates go up, oh, equity will come down, blah 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 blah, right? Because
of course.
money allocation is a lot more complicated.
Yeah. So then you go back to the idea really, where we can talk about, say, the foreign institutional outflows, right? Then if you want to think about it, if you really have a very strong dollar in that sense, which is most of the time correlated to a higher interest rate, then what really happens is that things definitely become more expensive in that sense. And where you have dollars being the currency that everyone uses across the world, it doesn't really bode well for emerging markets equities, or even developed markets equities itself. Yeah, so you're right to put forth that discussion, that theory as well. It's a one big cycle.
Thank you. Thanks for saying I'm right.
Okay. So essentially,
Hey,
not only
Sifu.
my US growth is screwed, so are my Singapore shares and my DBS. Oh wait, no, maybe not banks, because the interest margin, but yeah. Okay, thanks a lot, guys. Very useful. Learn a lot, but not.
No, I
very
would
good
I would
personally.
say the Singapore equity market is not as powered by foreign money as much,
Yeah.
relative to a lot of other
it's just
emerging
it's
markets.
just stable there, right? It doesn't move, it doesn't go up, it
Yeah,
doesn't go
yeah,
down.
yeah,
You just
yeah,
collect
yeah,
your 5% dividends and then call it a day,
yeah.
which is
Yeah.
alright.
But I would say that is definitely something to look at, right? How the emerging markets will then be affected as a result of this increase in interest rates and money flowing back into some of these hard currency markets. Yeah, good shit.
Yeah, I mean there has to be a safe haven somewhere, hopefully. So yeah, actually come and think about it, Jeff. So this is the way we are looking at things now, right? It's a kind of a change in the general environment, right? That's really killed the growth shares. Mega tech still hanging in there, but what are the bright spots here, right? Where is the trade now in that sense, in this new environment?
Yeah, I mean, ideally, if you want to think about it, right, like maybe just back it up a little bit, where we were talking about the whole Singapore markets having been affected as well. Where we see where the Fed was having to essentially anticipate 2 rate hikes in 2023, and the whole idea of them having to scale back bond purchases, then you start seeing the US equities having to fall, mainly in utilities, consumer staples, and industrials having to underperform. But interestingly, then you start seeing that consumer discretionaries, financials, and healthcare outperform. So that's where the whole idea of your silver lining will come in, right? And if you look in the past itself, then like look back in, say, I think on May 2013, where they actually did some form of post tapering from the Fed, then technology and O&G sectors actually outperform. So that potentially will be a space that you can look at, whereas REITs and consumer surplus, they fail to perform. Yeah, really. Yeah.
Yeah, okay.
Wait, but
that's
is there some thought process why all the growth stocks are dead? Because that's the ongoing question on Telegram group. Why is my portfolio red? I'm like, guys, really wake up. Don't everything growth stocks, but
it's not just red, bro. It's very, very red. It's like 满江红,
I know. By the way, for all you listening in, if you have any questions, drop in the comment section and we'll pick it up immediately. Yes.
Cool.
Yeah, Jeff, come walk us through a little bit. Like, why are the growth stocks like?
What's the theory behind this growth stock?
Why how can we look at this thing?
Well, that's a very, very a question that I don't really have an answer to as well. I really, really like to know. Um, but if I hazard a guess itself, why is everything dropping at some point? Is really that um, for myself at least when I look at such things is that it's good to not just focus on growth stocks, right? But also having to focus on high quality cyclical, say like large cap companies that don't trade on high valuation. So if you're going to think of like having to do what 0.5x, I mean,
Everything is on a high valuation now,
yeah.
bro.
So the thing is that you definitely not be able to benefit from the strengthening of the dollar as the Fed comes closer and closer to having to raise interest rates. Yeah, so that's where I would see. And um higher yield because of which where it results it results from expectations of a more aggressive Fed policy, right? It can definitely weigh on tech and growth stocks with lofty valuation because one of the biggest reason is really because they threaten to erode the value of their longer term cash flows.
Future value,
Yeah,
yes.
that's one of the things that I can think of. So yeah, like I say, really just try to focus on high quality cyclical companies that don't trade on high valuation. That's probably one of the alpha that potentially we all can look at.
I think now with all the drops, all your high quality high growth companies are actually undervalued. Right, you look at things like your valuations of things like Zoom pre pandemic and now, right, going 2 times 3 times revenue, but your multiple is actually lower. So relative valuation, that can be something to look at. I think it's a bit of a comparison before and after, but that's something to look at. But I think just one, I guess, small bone to pick on that discounting and cash flow valuation point, that I never quite. I mean, I understand what DCF is, but I don't quite believe in, and two reasons, right? One is who uses a DCF now? Come on, and secondly, and more grounded in reality is, I mean, look at the Fed minutes and all that, right? They still project a long term rate at 2.5%. What they have done in the dot chart and all is just to pull forward the interest rate hikes. So it's slightly higher interest rate. It is higher interest rates projected for 2022 compared to September or the June forecast. But if you look at 2024 onwards, that's the same. So if that's pretty much the same. So if you're using the Fed expected rates as your discount value, then when you DCF out 10 years, all that has changed for the rates really is the first 2 years and not the last, the 3 to 10. So I don't know if that quite justifies a 40-50% drop in share value. Right? It's probably a mix of slightly over exuberance, lower liquidity, people feeling I should take less risk, take some money off the table, and everything just comes tumbling down.
Yeah, I mean, I totally agree with what you have just said, Anthony. Definitely around the globe, you're gonna start seeing major central bank trying to pivot to engineer tighter financial conditions, right? So we all have been super conditioned by the on easy money, buoyant risk assets, the whole Fed meme, right, where the printer just go
money printer.
nonstop. Yeah. Yeah, I mean, it's not going to be the same thing anymore because the central bank is going to be unwilling to upset the apple cart, right? So this all is going to change when inflation start to persist, and with the whole fact that Powell is saying that it's no longer transitory. And I mean, nobody, like most of the money managers that I've known, they never understood why Powell said that it was transitory. It was more, I think people were trying to say that he was just trying to buy some time to come up with a more credible monetary policy to put in place. That's the whole idea of which how the central bank must essentially work towards having to manifest what they have put out, right? Because then that creates some form of credibility to the whole financial markets as well. Yeah, and
Also,
ultimately
cause
when
he
this
good
whole
friend
thing,
with good friend with Yellen, so yes.
yeah, I mean, Well, his portfolio is huge, right? Like his
Yeah.
equity portfolio as well. So does him some good. Yeah, no doubt. Yeah, but once everything start manifesting on the first couple of hikes to when it does very little to bring down the inflation towards inflation forwards, right? Then you really start seeing where financial condition really start ease further. Yeah, and that's something that
Okay.
not many people who really look forward to. Yeah, so yeah, the headwinds are changing, guys. Yeah.
Okay,
Wait,
sorry.
what does it mean by ease further? Wait, Anthony, you go first.
yeah,
You go first. Wow, a
is
lot of
it, I was gonna
questions.
say, is it ease further or tighten further?
So essentially, if you want to, yeah, I mean, sorry, tighten further. Yes, yeah, you're right. You're right.
Okay.
Yeah, yeah,
Okay, that
yeah,
makes sense now. Thank
yeah,
you.
yeah,
Mm.
yeah.
Yeah.
It's gonna
Wait, sorry.
unseat. You're gonna start unseat
So
equities and
so 3 rate hikes that's projected for first half 2022. That's the projection, right? It could sorry, that's projected for 2022. It could be more. If
yeah.
inflation doesn't come down. So what they're thinking, so correct me if I'm wrong. What it seems to be is that they're thinking, okay, I will quicken my taper. I'll stop bond buying by March 2022. Then after that, I'll start raising interest rates. Projected 3 times within 2022. That should bring inflation down to somewhere where I want it to be. That's the target. If it doesn't, then more rate hikes on the table.
Yeah, for sure. But potentially, like if we look at back in 2013 when there was a little bit of inflation and the Fed, Yellen was basically trying to play around with it a little bit, right? Trying to just signal some form of rate increase. The
And she
market didn't
failed.
really, yeah, the market didn't really boil well to like wasn't very happy about it in that sense. So, from that point of view, I think if the Fed will really have to come down with an iron fist, right? Say like, okay, we're gonna by March, do some form of tapering. We're gonna increase inflation. Interest rates. Then it definitely have to happen. And
Okay.
when it happens, the rest of the markets will then realize that hey, they are not joking anymore. So fun and games are over. Easy money is no longer a thing where we can essentially look forward to. So that's where you will start seeing your real rates driving up a lot, and this would unseat your equities and credit as well. Yeah.
Okay, so let me get a bit of color here. Essentially, all these things that are ongoing currently is really just a lot of signaling and a lot of, just news going out, right? Because
It's the beginning of the pain.
yeah, exactly.
Yes,
because
yes, exactly.
because like what Anthony said, right? Like all the reasoning behind causality of sell off and all that, right? Is very wonky, right? Because like the market, how can you react, as a fundamentalist just like that, right? So I think correct me if I'm wrong. I think there's a lot of liquidity swashing around in the market at this point in time, and because of all these signaling, people are shifting money out, right? So if that is the case, how do we know? Like, are there certain places that we can look at to know that our liquidity is moving around, or certain indicators that we can observe, as retail investors?
I guess from that point of view itself, then if you want to look at money markets indicators, that's one of the ways. But we have to probably start another podcast all over again to explain.
That's why you're on the
But
show.
but essentially, like having to look at say LIBOR, like the LIBOR oil spread, that's one of the things that we usually look at from a money markets perspective to see how tight liquidity or how loose liquidity is in the markets, right? If not, there's a few other ETFs that I haven't been looking at for a while, but I know that they signal money markets. Essentially, they are money markets indicators to see how much liquidities are flowing in the market as well. But one of the biggest thing that you as retail investors, right, is to I think it will be useful to just listen to what the Fed is saying. Don't bet against the Fed for sure, because when they say something, most of the time they want to maintain the credibility and make sure that it will happen. Because once they lose that trust, things will be harder for them to for things to come true, right? And with the whole QE and the whole Omicron situation having not exactly worsening, well, I would think that 3 hikes is pretty much a reasonable number to look at for 2022 and 2023. Yeah.
Fair. Okay,
Okay,
so
cool.
we're all aligned that Omicron is not gonna like mess shit up, right? It is just a current jitteriness in the political sphere, right? Is that kind of where I'm hearing?
I would say that well, for the Fed is not so much of a concern for sure, but maybe if you look at, say, Bank of England,
Yes.
they are always looking at your spot COVID cases, right, which essentially help to set their tone for 2022 outlook. And with the whole surprise hike of 15 basis point that has happened last week, it's just a signal that spot case growth and associated activities on the downside in in Q1 won't be enough for them to not exit from the whole emergency policy setting as well. So what the Fed is doing, they're also essentially gonna do the same. Yeah. And on the context of Omicron, the decision is still pretty much hawkish because it's not just because it's a 15 basis point move, right? Because nobody really cares. Yeah, but it's more of the fact that it essentially allows the Bank of England to tease up for a 25 basis point hike in February, which then allow them to roll off some of their balance sheet as well. Yeah, and that signal a whole new hiking cycle. Yeah, and if you look at it, the Fed, BOE, ECB are doing this, then your emerging markets, central banks are also going to do the same thing eventually. Yeah, so it's coming, guys. It's coming. Yeah,
I think it's a balance, right? They are afraid that COVID again brings about worse real economic conditions, so lower GDP or all that kind of thing, and they need to balance that against too much money pushing inflation too high. So I think it's a policy that needs to find that bit of balance.
I think one of the things to think about is that everyone has been, or rather central banks across the world have been very used to the fact that there's a lot of liquidity slush going in and out of on their own home countries, right? And it's so much that they are not even certain what to do with it. And what they do with it is essentially distributing it to the masses, right? And the money itself isn't correctly spent across, not as intended in that sense, because these days you have so much risk assets out there. They are so buoyant, and even the retail guys like my mom, my dad, they're also looking at like crypto and what's trying to see what's the next big thing out there. Yeah, if
Auntie buy TFC NFT, we got a long
NFT
extent itself, right?
Come on.
Yeah, it's a whole new paradigm to which the central banks are like, oh shucks, the money that I put out there for sustained economic growth, for spending and what's not, right? Your JC macro and macroeconomics, it's not really holding up anymore. So what are we gonna do? Yeah, and definitely there must come a point where like what Ben Bernanke did, right? He just didn't care and he just raised interest rates, and everyone got hurt in the market, but everyone wakes up from there, at least in the Wonderland dream, and move on with life. Yeah.
I mean, the reality is, allowing the markets to make decisions is a big black box, right? At this point, it's always been a big black box, and we already see the numbers in a sense of increasing liquidity with more M2 slushing around. You don't see money moving into the real economy, right? Which is why even the US government themselves, which say that they are very free market, blah blah blah, they have just launched one of the biggest infrastructure plan. Right, so they are doing what Singapore has always done and what China has always done, which is the government will spend. The market don't want to spend, we spend until you are willing to spend, right? So this has always been a mixed strategy in this part of the world, at least in Asia, and then you see US doing it, right? Because they have no choice. Right? The market is not doing so essentially this is what we call market failure, right? The market is not doing what it's intended for, and there's just too much speculation in the financial markets. Yeah.
Okay, wait.
Yeah, I mean that's
So
one of the
one last
fastest way
question.
to spend money. Yeah.
Yeah, sorry. We need to build ghost cities, right? Okay, no. That in all seriousness, the US needs better infrastructure. So I'm happy with that.
Yes.
I
It's
I
not
think
about ghost
it's a good one.
cities.
It's not about ghost
Yes.
cities, right? They well, they can't spend money properly, but they should spend money. One last question from me. I know we keep pointing back to 2013 and what happened, but do you see this as analogous to what happened in the taper tantrum 2018? I think 2018, 2019.
I
And
think
because
it's
my recollection of that is the Fed said they wanted to do something, markets got spooked, went mad,
Mm.
and the Fed said, okay, actually never mind, we don't need to do it anymore. We got our objective by signaling instead of actually doing anything. So is there a chance of reversal here, or is that a possibility, or just not at all because we are in a different context now?
well, from my point of view, I would say that it's more analogous to 2013 situation, right?
Mm.
Where it's post, it's essentially post GFC, and then the Fed is trying to suck back some of this liquidity that are out there. It's very different from what we see when it was in 2018, I think 2018, where they just did
I think it was late
they just
20.
said, yeah, they just gave a hike signal, say, hey, yeah, we potentially would like to increase interest rates, but no, nothing was done. And in this case, it's out there, it's concrete. The inflation numbers are high. It's a profile that is staggering. People did not expect that to happen. Like, look at your England, like UK's inflation profile, 7.1% for November, and CPI was what, 5.1%. Yeah. So if looking forward itself, right, inflation is going to set to peak a lot higher for a lot of the developed countries itself. So you could expect inflation to go a lot higher, say in quarter one, and it's not going to look very very nice. If you look in the real rate space, it's essentially trash. Yeah. Markets really looks very mispriced on everything itself on the real interest rate space. So no, I don't think the Fed is just doing it for just as a signal, but it's actually going to happen. But even so, if you think about it, the 3 rate hikes doesn't really bring it back to the benchmark of 1%, right? So
Yeah, no.
interest rate is still fairly low as against what we see in historical rates. So that's going to be an issue where the Fed, whether they will do it gradually, the speed of which how they hike will be something to look at, yeah, for sure.
Yeah, I think it's interesting. Okay, let me just add the political point. We must add the political point. It's interesting that elections are over. Okay, so elections are over. So we're gonna have some room, right? And also let us not forget that Yellen, which is the current finance minister, is good friend with Powell. So they are all aligned to kind of push their agenda, right? Okay, because I really don't think the Fed is independent. Okay, 不要骗自己, right? They are they are all
Midterms are
apparatus
coming,
of
right?
they're all apparatus of the state. But anyway, midterms is fine. At least given the current situation, midterms is not going to really shake their longer term strategy. But because they have 2-3 years to make up for the 2024 election run, so I do think that this will give them room to execute some of these things, right? And also let us not forget that the Fed, or at least the US government and the British government, decided to take very different positions in their rescue package, during the pandemic. Right? One decided to protect jobs, which is a problem because the longer the pandemic roll, the slower they are to react to what's going to happen, because a lot of the old jobs no longer become relevant. Right? And then the other decide to give cash right into the people's hand, which is the US government. Right? So I think it's a very interesting discussion to look into going into the future. Yeah.
Yeah, I mean, on your
Not
point
today,
as well,
man.
right? Yeah, on your point as well, Powell isn't equipped to quell inflation, right? He's more of a COVID emergency kind of Fed chair. So in his entire career itself, this is something very different from the norm. And with the whole fact that the Fed is trying to work towards bringing down inflation, implementing a loose monetary policy is not in Powell's playbook. Yeah. And the fact that he says that he's going to do it, he probably came under a lot of pressure from everyone, like Bernier, Yellen, and what's not as well. Yeah. So it's gonna be. It does seem like one solid bet for sure that rough waters in the equity market will be likely to stay, but hopefully temporary. Yeah, and hopefully the bull market will then probably chuck on after that. Yeah, if the Fed doesn't tighten too aggressively. Yeah, that's it.
So essentially, we need to let the easy liquidity rush out of the market first, and everybody feels the pain. After that, the people that are more stable and here for the longer term will then kind of pick up the market again. Is that kind of what I'm hearing?
Yeah, exactly. Yeah.
Okay. So last question from me on this thing. So what is with the new reality of a higher interest rate environment? What are some things that we need to be aware of as retail investors?
I think one of the things that really to think about with a higher interest rates environment itself is what kind of stocks do you want to look at, right? Like we have already sort of discussed, growth stocks will definitely be a thing where temporarily it's gonna suffer for sure. So if you see your portfolio to be a sea of rates, I guess it's pretty much normal. So Anthony, you're in good hands, I guess. But definitely, like financial equities, or even your energy sector is something that we all can look towards. There's almost always whenever there was a hike, these are the two sectors that tend to do very well. And it makes sense for financials to do well because then your cost of borrowing is a lot higher, right? So happy days for the banks as well. So these are some of the things to look out for.
Cool. Yeah, and you sound like you were from the bank,
Yes.
That's why it took you so long to come, right?
Yeah, that was a pass. But yes. You'll slowly get to know Jeff better. Any last things from anybody?
Nope,
regarding this segment? Okay, so yeah, Anthony, back to you. Are we gonna take a break? 30 seconds down. 30 seconds.
Drink some water. Jeff, drink some water. Right, and then we can move on to the other parts, I guess. If do you have anything else to add on the Fed? Anything you think we missed out? You want to enlighten us on?
No. I think everything's good. Yeah. Thanks for having me, guys, to explain this.
No, okay, stay on, right? You
gotta stay. You stay.
I am. You're very scared that I go.
Yeah, we scared. Yeah, he said he's gonna leave. So okay, we will take a break and we will come back after 30 seconds.
All right, we are back. We should add some ads in between, Reggie, right, for next time. Okay, so back to the usual, right? Talking about companies, talking about more micro stuff, less heavy, a bit more fun. We have a few topics today. Also political because we're Reggie on, so might as well use him, right? But first, let's start with we'll start with Shopify and their plans to roll out NFTs and kind of be a quasi NFT marketplace. And then after that, we are going to have it's all US China. It's blacklisting of DJI. It's Sense Times IPO in Hong Kong. Lots of things to talk about. Let's get started and let's get to that. Okay, so Shopify, right? Growth stock, dead in the water. Not as bad as the others, bad enough. Right? Sorry, all I can think of are rates, right? But on the business itself, right? Not just share price, because we are longer. We want to be mid long term. We want to select good businesses that grow, that can tide past and survive this period, and come back stronger. So Shopify, right? So what they did was they think 3 or 4 months back they launched an ability to sell NFTs through their marketplace with selected partners. last week they announced that this was broadened and this is essentially available to anybody on their highest plan. So you can mint NFTs, you can sell NFTs, you can trade NFTs all on Shopify. Yeah, I think
On their
that's the big
highest
news.
plan. Yes.
On the highest plan. I don't know. I can see why, right?
Mm.
Because it's difficult, we are on web 2 now. They have this, and apparently the customer service is great. And they write scripts for you to improve your functionality. So if you want to integrate with the crypto network, right, you want to be able to purchase and do NFTs as if you do any other thing. I think there is a lot of backend integration there. So it makes sense that you
Yes.
need to pay them on and be on their highest tier before they do these things for you, right?
Yeah.
But hopefully it becomes better and we and they, well, I don't want to say decentralized because that's not necessarily a thing, but they just make it broader and more available, because then OpenSea and all of that is going to be a tough competition.
Yeah. Walk me through
Any
a little
thoughts?
bit. Yeah. I think I'm very old school, right? So I'm still on the fence of like NFT. What the fuck, right? It's like I want to, okay. Let's be clear. If you guys listening, you really want a TFC NFT, right? We are open. But that is me being a business. That is me being a business person saying like, okay, people want this, right? We're gonna sell this and we're gonna make money, through this process, right?
We need a
Because
coin, not an NFT. Come on.
yeah. Okay. So all this open for discussion. If you guys really want it, right, email to us, hello@financialcoconut.com. Okay. But the idea is that is one thing being the seller. It's one thing, actually selling the shovel, right? And it's the other thing trying to dig gold, right? So what is the situation? I mean, as a Shopify investor, you'll be very happy to know that this e-commerce giant is staying relevant, right, with what is happening out there. It doesn't matter whether it becomes a long-term situation where there are a lot of these things going around, or if it's just a pop and then it moves on. But at least you know that management is very fashion forward, right? They are very clear of like, okay, what's happening out there, what are we going to do, and staying relevant to continue to innovate. I think that's very important, right? And it's very iconic of Toby lah, right, which is the management of Shopify, right? But I don't know, like NFT, is this, what is this?
Okay, wait. Right, so okay, let's not do a primer on NFTs, because I think we'll spend another half an hour and people need to sleep. But yeah, okay. Let's just talk about Shopify. They are the platform, right? They arm the rebels. So there's Amazon and e-commerce, which is monolithic. They control everything. They want to do everything. And there's Shopify, which makes it easy for you to set up your own e-commerce business, right? And they gather people that way. They make it easy. They help you do the back end. They help you write scripts to let you present your shop however you want it, right? And this is an extension of that, I would say, right? It's just building out the ecosystem, and you're right? It's more a signal of management. I don't own any NFTs. I don't quite understand it in its current form. I think there are use cases, but not the way it's being done currently. So I don't own any, but you can see how it's, and just the first example, right? In July, when they first launched it, one of the first teams they launched it with was the Chicago Bulls in the NBA. And what they did was, they, with Michael Jordan's team back in the day, so they minted a few Michael Jordan NFTs, sold it in like half a minute, essentially, for lots of money. And you can see it becoming a part of, if NFTs are a thing, and if NFTs really become digital collectibles and a way to signal value and all of, and a status symbol and all of that, you can see it becoming a part of a company's brand strategy, right? You show that you are a supporter. You don't buy the jersey of a football club. You will buy an NFT as well, and to do it all in one platform, on Shopify, it consolidates branding, right? Tells the story better, rather than having to send them to OpenSea or to help with the onboarding process of teaching them how to buy Ether to buy NFTs and all of that. So it just makes it easier, really. And even if NFTs don't work out, I think it's just driving adoption. It's just making people feel comfortable with their platform, both on the seller side and on the buyer side. And that's the value, I think, that Shopify is adding here. Right?
But,
you don't even need
one
to
of
buy
the
Ether
questions
to buy NFTs.
one of the things I have is that how can they compete against like the biggest player like say or OpenSea, you know? Yeah.
I think there's difference, right? So OpenSea is okay. I've never actually looked into it. I only know it exists. OpenSea is essentially crypto native, right? It's all for people who have been in crypto for forever and who know how to navigate it, and know how to use MetaMask and all of that. That that to me has always been a problem. I've always had an issue with the UI and UX in crypto, right? I'm more used to like browsing Shopee websites like your Taobao, your Shopee, your Lazada, your Amazon. I don't want as a consumer to go and figure out the 10 steps I need to do to get my coin on MetaMask before I can buy something. I just want to click
Okay.
and buy, right? And that to me I think is the use case here, right? It's like any other traditional thing that you buy, just that it belongs on the blockchain rather than a physical good or a service that you get, right? You buy it the same way. You don't need to go onto a different website. You don't need to buy a different currency. You can pay for it by credit card. Of course, if you want, you can pay for it with Bitcoin or Ethereum, but that's not the point, right? It just simplifies the whole process here. And I think that's the value they add for sellers, right? You don't need Ethereum gas fees to mint the NFT. It's kind of all caught up in the package, I think. Nobody really knows how it works yet. It's too new, and it's easier for the buyers because you don't need to navigate the whole crypto ecosystem, which I know you're good at, but not everybody is. So it broadens the potential market, I would say.
No, I think that it's definitely going to be very interesting to see how like OpenSea and say Shopify or the big commerce, right, can then try to link up these different NFTs at some point in time, right? Essentially you're essentially creating an e-commerce platform where you can sell both
Yep.
digital and physical goods. And with that whole synergy itself, I think it will definitely be very useful for parties at the OpenSea to have a great discussion with Shopify to see how they can integrate this whole thing. Yeah.
Or Shopify can just destroy OpenSea.
No,
Sorry,
I,
and the reason I say this is this, right? Look, OpenSea, great growth. I think they did what 1 billion in GMV this year, if I'm not wrong. Shopify is going to do 30, right? In terms of scale, they are still very different, right? So I think it depends on where it goes, right? There's room for collaboration, but if there is going to be a need for a premier NFT marketplace with all the bells and whistles, I don't necessarily think that a native Web3 crypto place will be the winner, right? They are the first adopter, so they have the network effects and all of that as they go on. But I don't think it's as certain as it is that they'll win, right? I think it's up in the air, and
okay.
whether it's a collaboration, whether it's competition, that I don't know. And honestly, as a Shopify shareholder, I don't really care. It's a small part of this business for now. It's just a nice function to have.
But for myself, how I really
Okay,
see
so
it is
Jen
that
wants to say something now.
yeah, for myself, from how I see it, it's like Shopify isn't exactly trying to compete against like existing marketplaces, right? Which basically take more of an active role in the sales process. Whereas if say artists that would like to use Shopify, then they will have the ability to then own the whole customer relationship process and be more responsible in owning the sales process at the same time. I guess that's the biggest difference in terms of how the NFT will then be handled in that sense. Yeah, I don't exactly see them as a one-to-one per se. Yeah, that's what I would put it out there.
Yeah,
Cool.
fair.
So it could be something like OpenSea for like artists, right? Or people who want to sell their art and be the creators essentially, and Shopify for people for brands, right? And for companies because they need to get on the bandwagon or because there's a proper reason for them to issue NFTs. I don't know, right? I still don't quite buy into it. So
I don't know.
yeah, it's all a money grab to me. The purpose of a
Yes.
company is to make money. They're selling NFTs to make money. Okay, I understand that.
Collectibles. So let us know if you want an NFT. We will release NFT if you guys want it. Okay? Yeah.
Okay.
Cool.
Okay.
Okay.
Next, let's move on to the next point. That is my
Yes.
point.
Yeah.
And of
You
course,
tell us about DJI.
it's always political, huh? So yes, US drone make US the okay. Let us start again. So yes, the US has put Drone Maker and 7 other Chinese tech companies on the investment block list. Okay, essentially means any US citizen are not allowed to invest directly in some of these companies. And DJI, probably a lot of you will be more familiar with because they are one of the largest drone makers out there today. And they have a retail store at Funan. So yeah, you can go and check them out. Right, they are one of the leaders, if not the leaders, in the retail drone markets, right? So they do all those stuff. But there are a lot of other people in the space, but that's not the focus, I would say. The focus for this point is that the US is stepping up their rhetoric to kind of double down on this situation of like, oh yeah, we're gonna go hard on China and we're gonna like stop our people from investing in China. But I have a little bit of different thought in looking at this piece of news. Like, what are you guys thinking of when you hear this thing?
I'm sorry, right? To me, it's like, oh, okay, that's a Monday, right? It's same old, right? We have gone through this for so many years. And look, I mean, I think DJI is the market leader. Everywhere they take what 75-80% of the US market, right?
Yeah.
But this is not the first time they have sanctions, not sanctions, they have actions by the US government against them. I think 2019 or 2020 there was again a similar action preventing them from buying from US suppliers, which impacted their supply chain. So this just feels to be same old, and they're not a public company. I can't buy them, so I mean like, okay, yeah, this is interesting, but I can't do anything about it.
Yeah, but I think
But-
this whole thing was on the back of the whole Xinjiang situation as well, right? Yeah. So yeah, like Anthony is fully out there. It's a way of how the US
let's
is.
just call it the Xinjiang
Yeah.
situation, right? Let's
Yeah,
not
Situation.
go any further there. Right? Situation.
Yeah.
We will get demonetized on YouTube if we talk about if we talk about it. But yes. Please continue. Yeah,
Okay.
share your thoughts.
Yeah, I mean, it's one of the things. It's one of the things where, if you want to think about it, where the US has been weaponizing this situation against China, and China has been using some other, like it's not so much of like material weapons anymore. These days, it's more of like political weapons where they just use against each other. And from what I see, this whole investment block list that they put up is nothing more than just the usual rhetoric that they've been out there. It doesn't really have much, it doesn't really hold much water, to be honest. Most of the investors are already, they pretty
moved
much
on.
already know what. Yeah, they moved on and they really know what they want exactly. Yeah. So what's the point of it?
Yeah, exactly. I think I wanted to bring it out because there's this ongoing discussion of like, oh, what if US continue to push Chinese companies out of the market, or what is going to happen to the market in general. And I think a lot of our listeners, they do own some sort of Chinese companies here and there, but exactly like both of you pointed out, right? Let's be clear, these 8 companies, they are all private companies. In other words, you have no direct access.
Not one of them that we'll talk about later.
Okay, we will talk about that later.
We'll talk about it later
in a few
but
moments.
Yes, they are
okay?
mainly private companies.
Yeah, they are mainly private companies. You have no direct access to the investment market anyway, right? So from blocking individuals, it's just a rhetoric, because a lot of these investment vehicles, that if they want to do it, they will set up in Luxembourg, they will set up in Singapore, and as an entity, they will invest in these companies. They're all late stage. They're not like angels to begin with, right? So they're not at that level. So it doesn't really matter, right? So if you see it, like China doesn't even talk about it. They are spending more time with Wang Lihong, right? So Chinese media is not even spending any effort talking about this thing, right? Which previously, a lot of the rhetoric were big news because it was tariffs, it was extra listing requirements for the Chinese companies. It was a lot of these kind of delisting pressure, and all that were real stuff. Like they were painful, right? Especially with the tariffs and blocking of selling of technology to the Chinese companies. So with all that, right, the Chinese, ambassador, of course, they come out and say that, oh, this is blah, 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 blah. So everybody has their own say. But now they're spending more time with Wang Lihong, so they're not even reacting to this, right? So I think that's the part that I want a lot of us to be clear of, right? That this is a continued rhetoric. I would say it's more of a political rhetoric to win the elections as they move along, and not so much a direct impact in any of the kind of financial markets that we are invested in.
Yeah. Although I will add one point to slightly counterbalance that and say that, look, right, the US, when the US moves, people take notice, right? And there's an impact on that. So look at FATCA and how it affects our lives, right? We have to fill in a stupid form every time because of a US legislation when we are not US nationals and we are doing business in Singapore, right? Look at sanctions and all of that. So it's a signal, I think. It just isn't of the level that hits the public companies yet at this stage, right? But if it does, it's going to be interesting. It won't have that bigger impact, I would say. Delisting would still be much bigger because that just destroys the whole economics. But yeah, I mean, and you can, and we'll talk about the second order impacts later when we talk about next topic, because I think there is some impact flowing through already there. Other than that, yeah, it's just sanctions, man.
Yeah, and I would say not all signals should be equal, right? In terms of how you calibrate your thought processes, and this is one of the signals that I will not really care about, because to me it is just noise, right? At least in the current situation, given where we are already, with all the tariffs still up, and all these technical block lists still there, why care about this, right? It's to me it's not important.
No, this is just adding to a technical block list. That's it.
Yeah.
At least from
sure.
that perspective. All right, cool. Jeff, any other thoughts on this?
No. You guys really covered most of it. Yeah.
Right, cool. Sorry, one last point from me, and I think this is just maybe interesting for me and not for you guys. So for DJI, right, Sequoia Capital is actually one of their investors.
Right.
I wonder whether they will be considered a US investor that is stuck, but that's something that their internal legal needs to figure out. It's just something that's like, oh, wait, they do actually have foreign investors who might not be able to monetize now. We'll see.
Yeah, but okay, let's be clear.
That's private equity, right? That's something we can't play with.
Private equity has all sorts of pattern, right? They can set up entity at anywhere, and you don't even know who owns the entity, right? So they can participate if they want to, which is why, in my view, this thing doesn't really hold much weight, right? So we can, all three of us, let's just register a company in BVI, set up a fund in Luxembourg, we can invest. Okay, no problem. So you get what I'm saying? Yes.
I would say take legal advice before you do that. There might be a problem. Depends.
Anthony, you're on the team for a reason.
And I'll point you to, I don't know, go and ask somebody else.
It's okay. We start our NFT business first, NFT first.
Yeah, NFT more important. Yep. Okay, then let's move on. Last one. SenseTime, right, which was also one of the companies that was in the latest blocked list from China, but and they are going to IPO. So interesting. So a step back, right? SenseTime is AI company, facial recognition. They are good at it. Apparently amongst the world leaders. Apparently also used in the Xinjiang situation, which is why sanctions have been levied against them. Okay, and they are going to IPO. Well, if you are a tech company in this situation, where are you going to IPO? In the US? Well, unfortunately, because you are China and you are sanctioned, no, you're going to your IPO in Hong Kong, right? That's the only place left for you. So they announced yesterday, 20th December, that their IPO is finalized. It's been up and down, will they one day for a while and over the past 2 weeks, but now it's final. They'll list on the 30th. What else can we say about that? Nothing too much. It's still rich valuations, I think. They are raising they are valued at 17 billion. And they're going to raise about 700 million of about 500 million revenues, all in USD. So still 35 times price sales, right? Not cheap,
Great.
but
Great.
not amplitude levels. Rakesh isn't here, but not amplitude levels of IPOs, or not Rivian levels of IPOs, right?
Rakesh will be back
So
next week. No worries. You can talk to him about it.
it's okay. I don't want to talk to him about amplitude anymore.
Mm.
Okay, yeah. So that's about it, right? Any questions before we start talking about US and China government relations again?
How do you know
No,
that
I
was
think
where I was going?
one of the things that you mentioned just now, where you said that they have been on the US watch list for a while, right? For since time. But I think it's interesting to think about how the US and China have this AI race that they have been that it has been around for quite a while, right? And I think sometime in October, where you have the Pentagon former chief software officer that say that China is essentially um, like way ahead of the US, and the US has no competing fighting chance against China in the next 15 to 20 years. And I guess it's one of the efforts where US is also trying to put out all these watch lists where you see a lot of the Chinese tech firms are on it for a reason as well, because it essentially slows down some of the R&D processes in China. So there's something interesting to think about as well, I would say.
Yeah.
Yes. Are you guys ready? Ready for my
Okay,
political
go ahead.
discussion? Yes.
Yeah, go ahead. Yeah.
And I want to build up on what Jeff just said, right? The Pentagon just came out and said, "Oh yeah, we are not going to win." Of course, let's be real, China just China already launched their their ecosystem into space, right? Essentially, they will bypass the GPS system, and they now have their own, a global tracking system, right? So the whole satellite ecosystem that they've built, and that's extremely important in the whole AI building process. That they have also, essentially built up the whole infrastructure of 5G, right, in China, and because it is a Chinese government led. Okay, let's be honest, it's led by the government. So in that sense, it's not all about profit anymore, right? So when it's not about profit, the rural internet outreach is very, very strong. I mean, I lived there before, so I know, like, even in a kampong, right, the internet is like, wow, very, very good, right? So with that, it allows access. I mean, you see those live streamers, selling you mangoes and all that. It's like, what the hell, right? So it is a thing, and that is very powerful. And I want to point out that Tsinghua just joined the top 10 university in the whole world. And how do people grade universities? Universities are graded by the amount of research that they can put out, right? So if Tsinghua finally joins the top 10 university of the world, this means that in China locally, there are a lot of research that is being put out there that is recognized within the scholar ecosystem. In other words, there's a lot of innovation happening already. So don't think it's a kampong, okay? But I would say it's on this news of SenseTime listing in Hong Kong. I think the good part to know is that if they can successfully list at 35x PE, right? That price to sales,
Yes,
okay,
yes.
PS, or it's crazy lah. But if they can successfully list at 35x PS, it is a great indicator of the appetite in the Hong Kong market, or at least in the China market, for some of these high tech companies. Because let's be honest, right? Most of these companies, they go to the US to list for the high multiple, right? So that they can raise more money for lesser equity, right? If China can successfully pull off some of these listings, like bringing TT back, multiple listing of all these companies in Hong Kong to show that they have a vibrant financial economy, that we also can pay. We can pay very good money also for high-tech companies. Then that is the start of the whole financial market shift, in China and in Hong Kong. And I would say it is interesting that SenseTime is listing in Hong Kong and not Shanghai. Very likely because Hong Kong now more stable. By China view, by China view, not my view. Okay, but anyway, yes.
Yeah. Okay. Sorry. So there's two things there, right? I think one is both of you are definitely correct. AI, machine learning, is going to be huge in China. They are probably one of the leaders, if not the leader, right? I think that's up in the air depending on which part of AI and ML you're talking about. But they will be there. So this is a secular tailwind essentially for SenseTime, right? They are a leader in the space in China. Maybe that makes sense, and maybe that makes them investable, right? But on the other point about whether this is a convincing listing for SenseTime and in Hong Kong, I think just just a bit more history, right? Beginning of the year, they wanted to raise 2 billion. So that was the initial IPO amount. At the same valuation, it's now been cut to 760 million odd. So not a lot of appetite. All the foreign investors have dropped out. So they used to have SL and one other hedge fund as a leader in the IPO. That's all gone. They are all replaced by state-backed mutual funds.
Exactly my hypothesis. Exactly how I was thinking about this thing.
Who are taking up 500 million of that 700 million. So
exactly what I was saying.
It's going to be it's mad, right? It's all Chinese backed. It's Chinese backed. There's the only Western investment bank involved is HSBC, right? No Goldman, no JPM, no BOA, none of their Chinese branches. It's all Hong Kong and maybe a bit of China. Even the Chinese banks are dropping out. The bigger Chinese banks have dropped out. So it's going to be interesting. I don't know how well it'll do. I frankly don't think there'll be a first day IPO pop. It's expensive. There's too much, there's too little of a public float. There's very little hype. It's the whole process has been very uncertain. And you add on to it the whole point about China data privacy and protection, right? That was the thing theoretically behind TT. That's going to be a thing with facial recognition and machine and AI and all that. So how does that play out? Will there be rules 3 months down the line that makes their business model unviable? I think that's also another risk, right? Even if they are listed in Hong Kong, that hasn't helped Baba, that hasn't helped Tencent, right? So I think that there are there's good tailwinds for it, but there's a lot of short-term pains that might need to be worked through before we get to the interesting and promising parts of the business.
I think what is interesting is exactly like what you point out, right? That because there's no public float, because there's so much fear of all these Chinese companies, and nobody's gonna pick up the companies, in IPO, and very likely there'll be a sell down. I honestly think that's the reality at today's valuation. Of course, we are not here to speculate, and it's not financial advice, huh? Right? So do your homework, huh? Okay, but maybe in closing, you share with us a little bit more about their business. Like if our listeners are thinking about this company, how should they look at this company?
I think the easiest way to think about it is someone like Palantir, right? That's the US analogy to it, right? They're huge government contracting. They sell their technology, or they license out their technology to governments. They help them implement it. And you can see the role of this even in Singapore, right? With our increased number of cameras, finding you for blocking blast lanes and all of that through automated cameras. That's where this technology actually helps. Just that instead of car plates, they can do it with human faces. They have great business during the pandemic. So they, how we walk into a mall and there's the sensors and they tell your temperature and who comes in and you use Trace together. In China, it's simpler, right? They can tell your face through your mask and they just track you there. You don't need to scan, you don't need Bluetooth, you don't need all of that. You just walk in and they take your picture and there you go. So a bit Black Mirror, a bit dystopian, but that's essentially their business, right? That's the tech, and that's where they have been making money. Of course, with AI, they have trained facial recognition. They are branching out into other smart city type technologies, but that's a bit more what they're known for. Really, is the facial recognition bit.
Yeah, I mean, like what Reggie said just now about the university thing, right? Since time is also interestingly one of the founding members of the Global Artificial Intelligence Academy Alliance as well. So, and Singapore has its very own international AI innovation hub supported by SenseTime as well. Yeah, so happy days. Yeah,
Happy
They're
days
spreading
with-
their claws everywhere.
Yeah, with more MRT
yeah.
cameras. Sometimes I don't understand why the fucking MRT outside has like 10 cameras that look so weird. You know? But okay, it is what it is. Welcome to the whole new world.
It's the price for safety, right? No
rubbish.
yeah.
Xinjiang
But I'm pretty
situation
sure
here.
the US have the same thing as well. It doesn't-
Very political today, but yes.
Yeah, but I mean, it's very exciting to look at what SenseTime has been doing, right? It's not just a company where it just produces products out there, but it's also working with a lot of academics partners like MIT, trying to put out there advanced, just pushing, being the forefront of the whole AI research itself. I potentially see that because AI is more of a toolkit than a domain knowledge itself. Then SenseTime will have a lot of space to venture into, say, like smart health tech, or maybe like road use development and what's not. Yeah, so definitely a lot of opportunity for SenseTime once they start IPO, and
Yeah, I think definitely interesting. A lot of optionalities, as you said, but this one don't need to FOMO. Just wait.
No need
I
for
think
more.
that's-
I'm quite
no need
sure.
FOMO,
I'm
no need
quite
FOMO.
sure it will pop down. It will fall down. But we shall
Yeah,
see.
that-
Okay, it's coming. It's year end. Nothing much
It's
to do.
next week. Yeah.
Yes. Other than looking at Wang Li Hong, you can look at this, huh? Okay. Great. I think that's
Okay,
it for
cool.
today.
good stuff.
Yeah, nothing else from me. Jeff, do you have
Yeah.
anything?
No, thanks for having us. Yeah.
Yeah. It was so fun.
Alright.
It was so fun. Yes. Gets good.
Sounds good.
Take care, guys. We will see you next week. Rakesh will be back, okay, and I'll be off. Okay, so take
Aw.
care. Aw. You guys can continue to joke about me anyway on your show, huh? So yeah,
Yes.
let's take.
It's like you never leave, right?
Yeah, it's like, oh yeah, yeah. So yeah, your DAO NFT, okay, all that thing. Email us, hello@thefinancialcoconut.com. See ya, guys. Bye.
See you. Bye.
Thank you.